Good afternoon, everyone. Gabe Velazquez here with you, TransparentTradingSolutions.com on a Tuesday, 14th October. We're getting some type of a range-bound market here after Friday's big sell-off. Let's get right into the charts. Over the last several hours, I'm doing this live where the markets are actually trading. But if you take a look at the S&P, it's sitting between bouncing back and forth between 60, more or less between 6,600 and 6,700, and kind of just stuck in the mud here under the surface. There's all, tech is getting hit again today. This morning it looked like we were going to go and test Friday's low, which I think is still in the cards at some point. Sentiment is still getting, the buy the dip crowd is still coming in here. Wouldn't surprise me again if we test these lows at some point here in the next few days, maybe even by the end of the week. So right now, I'd say range bound. If we break out, obviously, then we're going to probably head up in here to the 6750 where we broke out from. NASDAQ is kind of lagging a little bit this morning or this afternoon because of obviously the NVIDIA's down. Some of the mega caps. The rest of the market's actually rallying. The standout really is the Russell breaking out to a new high, probably having to do with interest rates. Rates are falling today, haven't really broken 4%, could be on the cusp of breaking 4%. Bitcoin is going to be critical that it holds this gap here from several weeks ago. We have a gap to fill in Bitcoin, and we're bouncing off of that right now. I've been talking about that. VIX still above 1918. Looks like it's bumping up against 22. This will be critical to see if the market sells off and it breaks 22. Elsewhere, just the dollar just kind of also consolidating. Gold, no surprise, another new high. And just when you think it's going to reverse, it just comes right back up again. Silver is the one that looks a little bit vulnerable. You can see that big reversal candle. We'll see. Obviously, it needs to break like 47. Obviously, hit 52 earlier. And we'll see. Oil also kind of just tracking the stock market somewhat, trying to bounce back. Nat gas looks like it's headed down to 3 on this particular contract. Kind of just meandering. It could be a bottoming process here. We'll see if it holds 3 for the next few days. It could at least try to attempt another move back up into the 330, 340, that type of thing. Everything else is, again, the key is going to be when we get some data coming out, and clearly Fridays was a little bit of a price shock. It bounced off the 50-day. And I do suspect we are going to test those lows. And then that's going to be the key. If we hold above the 50-day, which is basically the lows from Friday on the S&P, then I think we may have a short-term bottom, and then we may actually go out and try the highs. If, however, we break, I think that's going to kick in some algos and whatever. In the meantime, I would say that, it's going to be more or less range trading for now until we break out either direction here. You can see we're actually starting to pull back from there right now. So we'll see if, overall, I think the market's still not going to run away to the upside here. Their sentiment is way, way too extreme. And, but we'll see what happens here. And then as we get some data, they're talking about maybe putting out the CPI. That still hasn't come. That the lingering shutdown still is going to have some impact. For now, the market's been ignoring that. Under the surface, there's a bunch of stuff going on with earnings. Obviously, JPM's down on really good earnings, and it's kind of a mixed bag under the surface. But keep watching these tech stocks, because I think if they falter and then rates to falling below 4%, those are the key. I am going to have that live show probably starting next week, so keep an eye on that. I'm going to do it probably midday, so keep an eye on that. Subscribe to the newsletter, and give me a thumbs up and put some commentary in the chat. Um, so have a great rest of your week. Take care.